Hey everyone, my name's Andy. My channel is Finding Value. I was asked a question in one of the comments, what should I do in a portfolio? If you had 10 grand or $20,000, how would you deploy it? And that's a really complicated question because it all depends on each person. And I know that seems like a cop-out, and I'm not copping this out, I'm gonna go through this portfolio strategy. It's very quick, it's laid out, I think, pretty well and easy to understand. It's not gonna be a percentage, put 20% here, 10% here. I'm gonna give you my opinion. I want you to think about what my opinion is, and then you can make a decision on what you wanna do with your portfolio. But here are some options. I'm gonna show you some options and my viewpoint on portfolio strategy. So here it is, portfolio strategy by Finding Value. So how to deploy money, that's the big question that some people have asked. This has been asked probably 10 or 20 times throughout my videos or more. So if someone said, if you had $10,000 to invest, do you put it in 20 stocks, 10 stocks, 5 stocks? My question is this: why are you so focused on stocks? So I'm going to go back and I'm going to say it depends on a lot of things. It depends on your risk tolerance, what your current portfolio mix is, your knowledge about industries and the sectors, and your comfort zone. I know that seems like a cop-out to say this, but if you're going to go through this next bull market in commodities, I want you to be invested in things that you not only believe in, but you're knowledgeable about, and that you can stick through the thick and thin of this commodities bull market. Because if you're not going to be able to stick through it and you don't know what companies you own and you don't have that knowledge behind it, you're not going to reap the entire value out of the trade. You're gonna make 100% and you're gonna pop out when you could have had a 1,000% gain or a 2,000% gain or a 3,000% gain. So it's very important to look through my videos to understand the sectors, to understand how to value things, and then become comfortable with, maybe you start with a certain sector and then you deploy money into that sector first, and then you learn about something else, you deploy money into that sector once you start understanding that sector and the companies in that sector. So another thing, I want you to look at risk. What's your risk reward? Physical precious metals, in my opinion, is the lowest risk bet in the world of any asset. They can also have substantially high returns. Outsized returns for the risk that you are taking. They have low tax risk if you physically hold it. It's lower risk than cash, and it's probably the lowest risk on earth of any investment. And if you use some of the precious metals that have industrial uses, you could get very large upside with very minimal downside risk, especially if you're buying it when the ratios are all cheap to all other assets. And that's why I prefer physical precious metals. So if someone asked me, if you had $10,000 and you wanted to deploy that money into stocks, my question would be, do you own any physical precious metals? And if your answer is no, I would say, put all $10,000 in precious metals. Put maybe some in gold, maybe some in silver, maybe some in platinum, or the cheapest one right now is platinum. Maybe you put the majority of the money in platinum and you buy a little bit of the other ones. That's up to you. But if you have zero precious metals, physical precious metals, I would say start there first, because you have the lowest risk and you have very high returns in that sector. Now, stocks, they are much higher risk, much higher. What I do with my portfolio, now I'm running a lot larger than a $10,000 portfolio. So I can spread amongst many sectors and amongst many companies in many different regions. And I don't think it would make much sense to do that with $10,000. And I'm not trying to, boast my portfolio. That's not what I'm trying to do. What I'm trying to say is a $10,000 portfolio is going to be a lot harder to manage because you can't diversify and spread your risk out if you're going to go against a bunch of small caps, which are going to have outsized returns. Some of the companies I'm sharing are very small caps, and they're going to have outsized returns, but they're going to also have much higher volatility, and a lot of people see volatility as risk. And I don't want you to get scared out of a position. So my suggestion, if you have your precious metals, you've got a good base, you've saved the money there, and you want to speculate, because really speculate, because precious metals is somewhat speculation. But if you really want to speculate and put leverage on top of the speculation, which is stocks and companies, then I would diversify amongst the asymmetric bets that we know of. And you can see my other videos if you want to see what the asymmetric bets are and what those possible returns could be in asymmetric bets. A lot of them are very large. And obviously I don't know which one's going to be the largest in the actual outcome. So that's why I diversify amongst a bunch of different outcome, of sectors, so I can obtain whatever those outcomes are. And also, you want to diversify amongst countries. You don't want to be stock, uranium, there's a lot of African producers. You don't want all of your money in African producers. You want to spread it out a little bit. You don't want to get caught if something happens in Africa. And here's the asymmetric bets on the left-hand side: uranium, oil, and natural gas. Cannabis, I think, is a good one. Base metals, precious metals. And you can see my other clips if you want to get into details of each one of those. You can see my picks. You can even see I have some cannabis picks. They went absolutely berserk here. I mean, I think one of them was up 64% in one day. Tilray's absolutely gone up too. Tilray and the other one. So look at some of my clips that came out about previous bull market returns during these commodity bull runs. You'll learn a whole bunch. You'll see different sectors, and you'll see what they returned in previous bull markets. A lot of them are very outsized. Some small caps in each sector returned very well in each sector. Some of them were 1,000x, 1,000 times your money. But if you're not, you're going to have to be pretty crazy to get to the bottom of the bottom. So I'm going to cut that and say maybe 100x, something like that is possible. And sometimes precious metals, the physical precious metals, outperform mining companies sometimes and during some bull markets. So you also have to keep that in mind. And then one of my favorite picks are royalty companies. They usually do well all of the time. And they're going to do very well under a bull market. So I think it sucks a lot of the risk out, the royalty companies, and it gives you a lot of the returns. So I think that is a very good bet if you want to try to outperform the metals, the physical precious metals. I do it mainly with royalty companies. So you can look at some of my clips on royalty companies and what those business models are and why they typically outperform. And I'll link it down below. So royalty companies in precious metals, royalty companies, there's some coming out in base metals. I would be loading up on those. That's my opinion. Conclusion here. So if you have no physical precious metals at all, my suggestion is you need to get some. The ones I like are gold, silver, and platinum. Platinum is the cheapest, silver's the second cheapest, and gold is the currency type hold there. That is your real money. Now, if you have physical precious metals and you're comfortable with the position that you have in those, then I would say, go ballistic with some of your bets. Go for it. Don't hold back. I think royalty companies are the best all-around bet. And if you want to increase the leverage, go with a small cap royalty company if you want more leverage. You can get, like an Ely Gold, ELYGF. That Teuton Resources, TEUTF, is another good bet because they're very small. And when they start producing from these other, from their properties that they earn royalties on, I think they're going to make a ton of money, especially in an increasing price environment. Other sectors, uranium mining companies, oil and natural gas companies, and base metal companies, you can go in there. You can go small cap, mid cap, or large cap. Some of the large caps pay excellent dividends. And if you're retired and you're looking for dividends, I would be completely fine recommending a lot of the base metal companies like Vale, BHP, SOUHY, that's South 32, SCCO, Southern Copper. All of these are excellent bets to hold in a portfolio, even if you're retired, to get large dividends. You're also going to get large dividend growth, and the price of those shares should go higher as the base metals go higher. And if you're really, really crazy and you want to go all in with some of your money, do not do this with all of your money. But if you want to do it with some of your money and you want to go for really crazy returns, the junior explorers in precious metals, base metals, oil and natural gas, if you can find some junior ones, you know, they could return very outsized returns, especially if they can get all of the value from the exploration of it and they go into production and produce it. That's where the natural gas companies, those juniors, if they can find stuff and then they produce from it, they can absolutely tear up the returns. Same with uranium and same with precious metals. But the risk is far higher. Now, there's a lot of risk out there in terms of if you were to look out 10, 15 years, and let's say precious metals go ballistic. All right, let's say they go way higher. Now, your bet isn't just the precious metals going up. Your bet is that precious metals go up and tax rates stay the same. That nationalization doesn't happen. That they're not going to tax, they're not going to tax all of the gains from these companies away from them in terms of governments. You're also you're hoping that oil stays cheap and that oil doesn't become super expensive in relationship to gold. Because if that happens, that means that all the mining costs go up of a precious metals miner or a base metals miner, because the gold to oil ratio compresses, which means that value is getting sucked out of their margins. So this is a lot of stuff to think about. If you own the physical precious metal, all of those risks, they just get pushed to the side. You don't have them anymore. Now it's just a pure price play, but you don't have the leverage to the base, the metal. That's your trade-off. How much leverage do you want? The way I play it is I put a whole bunch in physical precious metals. That is the lowest risk bet. That is where I am completely comfortable in putting very large sums of money. Then I take even, a decent amount of money. Maybe it's 20% of my, we'll call it net worth, 10 to 20%, and I'll put it in some crazier stuff to try to get that leverage. I'm going to try to turn that 10% to more than my entire portfolio net worth is now. That's what my goal is, to turn those smaller amounts and beat everything else. What I do is I have explorers, I have lots of royalty companies, and I have everything that's an asymmetric bet that I'm sharing. I have a whole bunch sprinkled across all those sectors. So I might have 10 different uranium companies. I might have 5 to 10 different natural gas companies. I might have a whole bunch of larger base metal companies that pay high dividends to me. And then I've got a bunch of junior explorers with very little money in it to see if any of them can get 100x, 200x, 300x return. So that's my strategy. Hopefully this helps you with your strategy. Think through it. Make sure it works for you. Again, I am not a registered person to tell you what to do. I'm just telling you what I'm doing and what my opinion is on it. And hopefully this helps you develop your own strategies. This is Finding Value. If you enjoyed this clip, please subscribe, comment, and thank you for all the comments. I'm going to keep responding to the comments if you provide comments and give you what you want. Thank you.